This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
This lecture is on Chapter 8, and as you can see, is cost, volume, profit analysis. And as always, I hope you've got the notes in front of you, because essentially what we're doing throughout this chapter is looking how the costs and the profits will change as there's a change in the volume, in the sales volume, the level of activity. And to make sense of it all, let's start working through the examples. First of all, example 1. I think a nice easy one, but make sure. Product X has variable costs of $2 a unit and a selling price of $6 a unit. The fixed costs are $1,000 a year. And part A says, if the budgeted sales and production are 300 units, what is the budgeted profit or loss for the year? Well, that should be no problem. Several ways you can get it, but I think the most efficient, and especially because of what's coming later, is to say, okay, the contribution per unit I can't remember which lecture, but I made sure in an earlier lecture you were clear what we meant by contribution. The sales less the variable costs. So here, selling price is $6, the variable costs are $2, so there's a contribution of $4 per unit. And so however many units we sell will generate $4 a unit, and of course however many units we sell, the fixed costs are $1,000 a year. Well, part A, it says if the sales and production of 300 units, well, the contribution in total, 300 units at $4 is $1,200. But of course, to get the profit, subtract the fixed costs of $1,000. The profit, $200. Lovely. And of course, I could ask you any number of those. If it was 400 units, what's going to happen? 400 units at $4 contribution. The fixed cost will be $1,000, whatever happens. Part B, the first bit of what I might call definition, it says, what is the break-even point in units? Well, what do we mean by break-even? I've already said that as the number of units changes, the contribution changes, and therefore the final profit, or loss for that matter, changes. You know, if we only sold 100, we only get 400 contribution, we make a loss. Well, break-even is the point at which we make 0 profit, 0 loss. Explain why it's so important after, but I want to know, how many units are we going to sell to make 0 profit, 0 loss? Well, again, the profit must be the contribution, the total contribution, less the fixed costs. Well, since I want the profit to be 0 for break-even, surely the total contribution has to be equal to the fixed costs. The contribution has to be 1,000. How many units do I need to sell? Well, we know that each unit generates $4 contribution, so the number of units, 1,000 in total, $4 each, 250 units. There is break-even. Now then, although that really should be common sense, there is a formula for it, and it is worth learning because give you the information in different ways, you don't want to waste time. But you can see immediately above that the break-even volume, it's only writing down what I just did. To end up with 0 profit, total contribution is the fixed costs. To get that total contribution, divide by the contribution per unit. So not very pretty, I'm afraid. I'll try and write a bit neater. But that's, of course, exactly what I did. Fixed cost divided by contribution. What is the break-even revenue? Well, that's easy here, surely. We know that we need to sell 250 units, which is this C. We just worked out break-even is 250 units. We know the selling price is $6 a unit. So the revenue we need to break even is 1,500. And why are those so important? Sometimes we might look at units, other times we might look at revenues. Is of course whatever we're budgeting on, this question said we're budgeting on 300 units. That clearly is only ever an estimate. The sales might turn out to be higher, they might turn out to be lower. And what's desperately useful is to know how many you need to be selling to make a profit. All right, we hope it's going to be 300, great. But if it's lower, well, as long as we still make a profit, I'm okay. I certainly don't want to make a loss. Well, we need to sell at least 250 to be making a profit. Or, very often instead, we just look at revenue and say, well, we need to be earning revenue of 1,500 to be making a profit. And if we thought there was any risk of it being less than 250 or 1,500, we might consider whether it was actually worthwhile taking the risk. Anyway, that's break-even units, break-even revenue. And of course, we'll make it a tiny bit more fun. How many units need to be sold to achieve a target profit of 300? So not break-even here, but suppose for some reason I want to make sure that we get a profit of at least 300. How many to sell? Well, here, I suppose you could learn a formula, but surely we know that the profit always is the total contribution less the fixed costs. With break-even, we want to end up with a profit of 0. Here we want to end up with 300 profit. And therefore, how much contribution do we need in total? 1,300. And therefore exactly the same approach as before. The number of units we need to sell. We want 1,300 contribution. Each unit's giving $4. And so we need to be selling 325 units. So that's common, but it's just the tiny sort of thing the examiner might do. You know, you get people learning the break-even formula, but not knowing why, just learning a rule. You know, anyone can learn a formula. So there's a way of not making it any harder, going for a profit of 300, but where just blindly applying the rule doesn't work. If you understand what you're doing, then it's just as easy. All right, well, still, I hope, very straightforward. But let's look at the next example, example 2. It says calculate the margin of safety for example 1. And let me explain what we mean by margin of safety. I know there's a formula there, but the point is, we were budgeting on selling, what was it? 300 units a year. So that's what we expect, and we hope we're going to sell. But of course, there's always the risk it might be lower. And we've said our break even was, this is why I was winding back, was it 250? Yeah. Break even was 250, so as long as we sell more than 250, we are going to be profitable. Well, it's nice to have a measure as to how much wrong we can be. To get the margin of safety, you take the budgeted figure, which was 300 units, minus the break even. We need to sell at least 250. And so we can afford to be 50 units wrong. in our budget. And some people do write margin of safety just as units. But writing it just as units doesn't really help too much. You see, 50 units is quite a big drop here on a budget of 300. If, on the other hand, the budget was 5,000 and we could afford a drop of 50 units, well, that's a very tiny error. And so better is to express it as a percentage, to express that fall as a percentage of the budget, which is 300. And so in percentage terms, the fall of 50 on 300 16.7%. We call that, as you've got, the margin of safety. And of course, the smaller that percentage is, the more risk that we will actually end up below break even and make a loss. The higher that percentage is, then even if our budget is wrong, it would have to be wrong by a much bigger amount before we were risking making a loss. All right, let's carry on a bit more. Over the page, CS ratio. Now, I'm sorry, these keep referring to example 1, so you're going to have to keep looking back to example 1 for the figures. Example 3 says, calculate the CS ratio for example 1. Well, the CS ratio, the C and the S, stand for contribution to sales. And it's simply the ratio of the contribution per unit to the sales per unit. What was the contribution per unit in example 1? Remember, we were selling at 6, the costs were 2, the contribution was $4 a unit. And what were the sales? The sales selling price was $6 a unit. And so the CS ratio, 4 divided by 6, write it as 2/3 if you want, or 4 divided by 6, point. Now, here, 66666. Now, I put lots of places there because I did choose silly numbers here. Obviously, it doesn't divide exactly. And I want to show you something with this later. In the exam, though, if you were asked to work out the CS ratio, do it to 2 places normally. And if it was in the exam, I put 0.67. But as I say, because of something else I want to show you in a moment, appreciate it is actually 0.666666. And what does that mean? Sell 1 unit and the contribution will be 0.67 of the selling price. But surely as we sell more and more units, well, since the contribution on each unit is 4 for every 6 selling price, the total contribution will always be 0.666 times the total sales. And we can use that fact in a rather nice way. Look at example 3. Calculate the CS ratio, we've done it. And it says what sales revenue is needed to generate a target profit of 3,200. Now, fine, you could do it the same way as we did in example 1, where it said target profit of 300. But depending on the information you're given in a question, if all I told you was a CS ratio and the fixed costs were 1,000, well, do it as always, the total contribution less the fixed costs must be the profit, and we want a profit of 320. So the total contribution would have to be 1,320. Now, of course, to get the sales revenue, we could effectively do what we did in the previous example. I could say, oh, well, the contribution's $4 a unit. Therefore, how many units is it? And when I know how many units it is, the revenue multiplied by the $6 a unit. But since I know the CS ratio, we can actually do it very quickly. Remember, the contribution is always, in this question, 0.6666666 times the revenue. And if the contribution is that times the revenue, surely it means the revenue must be equal to the contribution divided by the CS ratio. Now think about that and learn it if you need. But remember, revenue times CS ratio is contribution. CS ratio is contribution divided by revenue. Rearrange it. The revenue must be contribution divided by CS ratio. So I can get the revenue directly. We know the contribution we want, 1,320. We know what the CS ratio is, 0.6666666. And if you divide, it comes to 1980. If we have revenue of 1980, we will end up making a profit of 320. And of course I can check it. It doesn't take a minute to check. But in fact, I was silly. Checking it would be just writing down what I'd just done. But there we are. Now, as I said earlier, don't worry about the rounding. If it was in the exam, I'd use 0.67, or it'd probably divide, exactly, not needing rounding. The only reason I use 0.66666 here is if you want to check it other ways, because you can get the figure, as I said before, by getting number of units and then multiplying by the selling price per unit. So I didn't want to cause confusion, ending up with a different answer. All right, nearly there for this first lecture. But there are two charts that you need to be aware of. Now, I did say when we did linear programming that these days, because of the way the exams changed, it is actually unlikely that you could be asked to draw one of these charts. But you could certainly be tested on what they are and what they're showing. And they could even give you a chart and check that you understood what the lines on it actually are. And so the first one, there are two. The first one is this break-even chart. And let me show you, I've still got my ruler here. No, I haven't. So this is not going to be, this is not going to be precise, but still. The break-even chart, we're going to show the costs and the revenues involved. Dollars up there, here, as the number of units change. And I'll do my scale. I'll go up to 3,000 there, and I'll go up to 500 here, and I'll try and be reasonably accurate. But even in the exam, even if you were asked to draw one in the paper-based exam, you don't get given graph paper, usually. So it's a question of being neat. It doesn't have to be precise. But what will we do? First of all, let's draw a graph for the actual revenue. The revenue, obviously, if you sell no units, the revenue is 0. The more units you sell, the more the revenue will be. And if we sell 500 units, the revenue, it was $6 a unit in example 1. And so the revenue, 500 at $6, will be 3,000. So there's our first line, the total revenue. What else? What about the costs? Well, the costs, now then, I've got some workings. The costs, if we sell no units, then of course the variable cost in total is 0, but there's a fixed cost, whatever happens, of 1,000. What happens if we sell 500 units? Well, the variable cost was, I think, $2 a unit. So in total, the variable cost will be 1,000, and we've still got the fixed costs of 1,000. So whatever happens, the fixed cost is 1,000. The variable cost, of course, more units, more cost. And so I will show the fixed cost. 1,000 is about there. And I'll do it as a dotted line. You'll see why in a minute. But what I really want is the total cost, fixed plus variable. Now, of course, when there's no units, there's no variable again. So the total cost will be 1,000. With 500 units, well, I just wrote down, fixed cost is still 1,000, but there's 1,000 variable. So the total will be 2,000, which is about there. And so now I can show the line for the total costs. Oh, trying hard here. And there we are. There is our break-even chart. And make sure you can interpret it. Surely, anywhere up here, in this area, we're making a profit because the revenue is greater than the cost. Everywhere down here, we're making a loss because the costs are greater than the revenue. But that point there surely is break-even. The costs equal the revenue, the profit is 0. And although you would never be reading anything off the graph, that would be our break-even units. We know it's 250 and it looks about that. And here would be the break-even revenue. So it's just a nice diagrammatic way of showing what break-even is and why it's so important. It's only just one thing that is quite important for the exam, and read carefully. Although it always looks like that, the bottom axis I've done there in units, and so the break-even is 250 units. You can also do it in terms of revenue. Of course, no units is no revenue. 500 units, it was $6 a unit, is 3,000 revenue. And of course, the break-even would now be in terms of revenue instead of units. So it doesn't matter. Some do it in units. I actually prefer it in units. But some do revenue on the bottom axis. It doesn't matter. Well, it does matter, sorry, if the exam specifies clearly. Anyway. All right, finally, the other chart to be aware of is, in fact, a much simpler one. It's over the page. It's the profit volume chart. So profit volume. You can fill it in yourself in the notes. But we show the profit as against the sales. Well, of course, if we sell no units, what's I've done there? Oh, I'm in a disaster. If we sell no units, what will the profit be? Well, of course, you have no revenue, you have no variable costs, but you have got your fixed costs of 1,000. And so you'll make a loss of 1,000. As you start selling units, well, you've always got your fixed costs, but we start earning a contribution, and surely as a result, the loss will reduce and we'll eventually start making a profit. Let's write a bit nicer. And in fact, you see, if sales were 500 units, how much profit did we make? The contribution at $4 it was 2,000, the fixed costs were 1,000. And so we made a positive profit of 1,000. And there we are. Which is a very simple chart, this one. Just how the profit changes with the sales. Here, clearly we're making a loss. Here we're making a profit. Here is break even. And just like with the last one, the horizontal axis can either be in units as it is here, so the break even will be 250 units, or other people sometimes do it in terms of sales revenue, in which case it looks exactly the same, except instead of going up to 500 units, and have gone up to 3,000 sales revenue, but more importantly, the break even on that scale, instead of being 250 units, the break even point would have been 1,500. Okay, well, there we are. I'm going to pause there because that is basic application of cost volume profit. Make sure you're happy what contribution is, make sure you're happy what break even is, make sure you're happy with what the CS ratio is. Later you've got to practice questions because they can ask them. Play with them all ways around and throw in little tricks and things. However, after the break, in the next lecture, we'll work through the rest of the chapter, something called multi-product cost volume profit analysis, which needs a bit more work, a little bit more complicated.